Right. Hi, everyone. Welcome. My name is Katie Masteller. I'm coming to you from Summer Associate Hub, and we are thrilled to have you all here. If you have been here before, welcome back. If it's your first time at the Summer Associate Hub live virtual series event, we are so glad to have you. And promise it's going to be some worthwhile content and discussion. We have a truly all-star panel of finance attorneys, and I'm excited for you to hear and meet and learn from them. The agenda will be very simple. We'll have a panel discussion featuring our attorneys from Willkie, Fried, Frank, and Proskauer. And after the panel discussion, each firm will host a separate breakout room for those who want to join, ask questions, or simply just listen to learn more about the firm. We'll talk about those breakout rooms in a minute, but do be sure to refer to our chat when we get there in a second. And it wouldn't be a Summer Associate Hub event without prizes and raffles. We'll do raffles at the end of the panel discussion for some great swag prizes, generously sponsored by tonight's participating firm. You do have to be present to win, and we'll be calling your name out. So make sure to stay until the end so that you can see if you win. But finally, before we dive in, a final few housekeeping items from me. First off, if you're new here, what is Summer Associate Hub? Summer Associate Hub is a free content and resource hub for law students embarking on the 1L and 2L recruiting process. We know from our own experience how hard it is as a 1L to understand what it's really like to work at a law firm. And so our platform, summerassociatehub.com, has blog posts, podcast episodes, short video tutorials, and other content to help you learn about practice areas, locations, and prepare for the recruiting process. We host live virtual programs just like this, where students can learn directly from and network with law firm attorneys and recruiting team members. We've got 1 week left in our virtual series, so do be sure to try to catch us live next week as well. And if you missed any of them, all of the recordings are posted on our website, and it is a great resource for students to refer back to as they start the recruiting process this spring and summer. The link to RSVP for future sessions will be posted in the chat. And next week, as I said, will be our final week, featuring LA and Orange County on March 11th and private equity and fund formation on March 12th. I do hope that you'll join us for one of our final live sessions. Finally, we mentioned breakout rooms. I promise they are good, fun breakout rooms. No group activities. At the end of the panel, around 8:10 Eastern, we'll move to breakout rooms. Each firm will host a breakout room where you can go and ask more specific questions or simply just listen and learn more. The breakout rooms have been a highlight for both students and firms, especially in making early connections as the recruiting season starts to kick off. The firms want to meet 1L students, so please be sure to join a breakout room and keep in mind that you can move between breakout rooms. You don't have to stay in just one. And when I stop talking in a minute, I'll repost all of those links in the chat. And then they're also in this little Word document, which is a pro tip. So you can download that Word document for ease of access to refer to those links later on tonight. So with that, I will stop and I will turn it over to our group of panelists to introduce themselves, their practice, and briefly why they chose to be a finance attorney. So Jason from Willkie, we'll start with you.
Katie, thanks for having me. Obviously, happy to be here tonight with the co-panelists. And my name is Jason Pearl. I'm a partner at Willkie in New York. I've been at Willkie for a while, and I've been a partner for a bunch of years now also. My practice focuses on mainly acquisition finance, restructuring work, kind of a mix of a lot of different types of borrowing activities and lending activities, in good times and in bad. I'm sure we'll get into it tonight. Kind of the world of finance at these law firms takes various shapes and sizes, and we'll get into a bunch of that. But a lot of what I do is acquisition financing, good times borrowing, some distressed stuff as well, representing private equity sponsors, public and private borrowers, as well as lenders. So I kind of do a lot of different things. For the answer of why I became a finance partner, I knew early on that I didn't want to do M&A work. I liked the finance aspect that somebody wants to lend, somebody wants to borrow. There's a meeting of the mind, and at the end of the day, kind of most of the time it's people are being happy that money's moved hands. And it was a good decision a long time ago to do this, and I still like doing it to this day.
That's great. Thank you. Jin, from Proskauer, over to you.
Uh, Thank you for having me. Hello, everyone. Good evening for those on the West Coast. I think it's still afternoon on the West Coast. My name is Jin Joo. I'm a partner at Proskauer Rose, and I'm in the New York office. I'm part of our corporate and fund finance group. So I think sort of my practice very much sort of overlaps with description that Jason gave. So I am, easiest way to explain it is I'm a lending lawyer. So whenever somebody wants to borrow money or lend money, you need, law firms represent, one law firm represents the borrower side and one law firm represents the lender side. I am mostly on the borrower side, but I do some lender side work as well. I do acquisition finance as Jason does. I also do general corporate finance for regular, private and public companies because, like just as we all have credit cards, right? Companies and even private funds and public funds have sort of credit facilities that they can use for their working capital and things like that. So we represent companies on those as well. And, obviously private equity sponsors, when they make an acquisition, they typically use debt to partially fund their purchase. So and that's what Jason meant by acquisition finance. If there's a debt piece to an acquisition, we would represent either the borrower or the lender in that transaction. And then the piece that the part of my practice that has been growing is what sort of a subset of finance, which is fund finance. So these are sort of loans made to private funds and private equity sponsors themselves for their working capital, or also in order for them to support sort of their portfolio companies as well. Whereas if you look at a private equity fund, the private equity fund will own a bunch of portfolio companies underneath. Each of those portfolio companies will have debt of its own, but then sometimes the private fund up above that owns all those private portfolio companies will have debt of their own as well. So that is a growing area of our practice within Proskauer. I will stop there and turn it over to Ariel. Oh, sorry, I didn't say why I chose to be a finance lawyer. So kind of like similarly, when I was a summer associate, I knew I wanted to do corporate law. I thought M&A was all of it. So I tried some M&A. Similar to Jason, and I don't want this session to be a sort of a M&A bashing session. And things are different now, but one thing that I remember from being a junior associate as in the M&A department was really sort of kind of long nights and days stuck in a windowless conference room at another law firm, sort of going through boxes and boxes of documents, which I was not a big fan of. And also, like a lot of things in life, things happen by chance. And I think sort of human interactions sort of happen naturally as well. So, initially a few partners that are in the corporate and finance group that I work with, sort of kind of we clicked together very well. I liked working for those partners. Those partners thought I was okay and kept giving me more work. So like that built into sort of my practice as becoming a finance or a lending lawyer.
Great. Thank you so much, Jen. And last but not least, over to Ariel at Fried Frank.
Great. Thanks so much, everyone. Really excited to be here. Jin sort of stopped anything I could possibly say because he said it can't be an M&A bashing session. So I'm going to have to be very brief now. No, in all seriousness, my name is Ariel Zell. I'm a partner in the finance group at Fried Frank in New York. I've been at Fried Frank for 10 years now. I started my career at another firm. My practice actually very much intersects with both what Jason and Jin explained about their practices. And I'll apologize in the beginning because I realize that speaking to first-year law students, there's so much jargon and terms and other concepts and ideas that we're going to be using tonight that certainly aren't covered in first year of law school to the extent I remember it, and probably don't get covered in law school at all. So you'll have to bear with us because we live and breathe and speak in these terms every day, all day, every day. That being said, my practice area is similar to Jin and Jason's, where I represent both companies as well as private funds, private equity funds, and hedge funds in borrowing money from lenders, usually banks, and sometimes other funds. It's confusing, but now funds can both lend money and use the money, as in order to fund their investment activities. To use the terms, I practice both in corporate finance and also, as Jin mentioned, in fund finance. One other area that's been that's been a growth area of my practice, which is getting a little bit more niche, is representing issuers, meaning people that companies or funds that issue bonds, that issue debt as a debt security. I think you guys will learn about securities at some point in law school, hopefully, and issuing them in private placement transactions, as opposed to using the public markets like the stock market or other methods, issuing it in sort of a private transaction to institutional investors, including insurance companies. And so that's been a really interesting area that's grown recently and I've been a part of. To cover the question of how I became a finance lawyer, to a certain extent, like what Jin said, I was doing actually a bunch of different things. When I started my career, including M&A and securities as well as finance, and the finance wound up actually being the path that chose me to a great extent, is where the opportunities really presented themselves, and I really enjoyed doing it. One of the areas I knew I wanted to do transactional law as opposed to litigation, because I didn't have sort of that antagonistic personality that wanted to go head to head with everyone on a daily basis, which is what I thought litigation was. And I wanted to be more collaborative and working towards a common goal, even with the other side. And so that tended towards transactional practice. And then when I was there, one of the things that really interested me about finance was that the transactions keep on going, that they don't, even when you close the transaction, what you have when you represent a borrower or even a lender is that you have an ongoing relationship once the money is borrowed. And for a borrower, for example, which is almost all of my clients, they need to actually operate within the confines of the agreement that they entered into in connection with borrowing the money. And so that creates its own set of interesting challenges, questions, puzzles, as it were, almost, to try to figure out how you can navigate the goals and the operations and the activities of your client within the confines of the agreement that it had to enter into in order to borrow the money to finance its activities, investments, goals, etc. And so I found that to be a very, very interesting part of the practice starting out, and it's only as I've gotten more senior and gotten more sophisticated, become more sophisticated in the practice, that part of it has become even more rewarding and more interesting over time.
Great. Well, Ariel, we're going to stay with you, but we'll give you a second to take a breather, and maybe we'll jump to start kind of with Jin, but we'll kind of go around the grid here to do a little bit of a deeper dive into finance practices, since so many of our attendees are 1Ls and future viewers. So Jin, tell us a little bit kind of more detail on the matters that you work on, and then maybe a little bit of insight on what a day-to-day is like on those matters for junior associates on your team.
Sure. So I think Ariel touched on a lot of this, and I think there will be a sort of a similar theme running through all three of our sort of commentary here, because we do very similar things and probably work on the same types of transactions. I'll take a simple or more of a straightforward private equity acquisition, sort of a buyout scenario, and what that sort of looks like, and in a way, hopefully, your first year law students might be able to wrap their head around. But taking a little bit of a step back, I think Jason touched on this earlier. Sort of one of the reasons why I ended up choosing finance was, I found it as less overwhelming, right? Like I think the universe of documents and the transaction itself sort of kind of is very intuitive, right? Because someone needs to borrow money, and then you have banks on the other side who's in the business of lending money, right? So there's always there's usually a match there. And everyone's happy at the end of the day because they're doing what they do best and what their normal operation is. So when you look at a private equity sponsor who's looking to buy a company, they will, as I mentioned before, they will always typically use some form of debt. They typically will not pay all of it in cash, but they will borrow some of it. And basic economics, like if you borrow to make an acquisition, sort of you have to pay interest on that loan. But then after you pay that interest, all of the upside in the value of the company that you purchase with the debt proceeds, that you get to keep all of the upside, right? So that's why, and it also frees up sort of capital at the private equity sponsor level to deploy the cash that they have in making other investments, right? So it multiplies sort of the potential pool of investments, and it also multiplies the potential upside when either the company IPOs or the private equity fund sells that company to another buyer hopefully at a profit. So when we come in, we come in sort of at the same time that the M&A colleagues are negotiating the acquisition agreement. In tandem to that, if there's going to be a debt financing, like we would be negotiating from a company and also the buyer's perspective. I'll be speaking from the buyer's perspective. We will be sort of negotiating with the potential lenders who's going to provide financing here, right? So when a purchase, like the acquisition agreement is signed, and similar to how we would buy a house, purchase agreement is signed at point A, and then there's a sort of a period in between, there's a lag, and then some weeks or months later, mostly due to sort of HSR or antitrust filings, there is a sort of a waiting period where you have to get approvals, and then the closing happens at a later point, right? So when the acquisition agreement is signed, everyone wants to make sure that there's going to be sufficient funding at closing for the buyer to pay the seller in that transaction. So what would typically get signed up in addition to the acquisition agreement is what's called a commitment letter. And I don't want to get into too much detail, so I'll probably wrap it up really quickly because this is not a training. So we work in very closely with our M&A guys to sign up, make sure that our private equity sponsor will have access to the funds from their lenders when the closing comes, right? And after we sign the credit agreement, we will be negotiating, or after we sign the acquisition agreement, we'll be negotiating the loan documents in the interim. And I chose finance sort of kind of, it is a knowable universe. Even as a junior associate, right? You have a loan agreement, somebody's lending money. And then if there's collateral, there's a security agreement. And then there's, like a few sort of closing deliverables. So you have a sort of a known universe of documents that you see over and over again. So I found it sort of intuitive and also quicker to try to master a field and kind of feel like I know what I'm doing. And then in the next transactions, I know what's going to come next as a next step, which was very helpful for me to feel like I'm adding value in a transaction, even as a junior associate. And then, so, getting back to your sort of the second piece of what my day-to-day looks like, as Ariel also mentioned, even after the money goes out the door and the loan is made, the banks will not sort of kind of step back and say, all right, you go do whatever you want with my money and then pay me back 3, 4, 5 years later. That's not what happens. We have this loan agreement that governs what the company can and cannot do while the loan is outstanding. So one big example is the lenders are not going to want their borrower to, pick out a big loan and then pay a huge dividend to their shareholders, right? That's money leaving the system that the lenders really care about. So there's going to be restrictions on when the borrower can pay distributions to their shareholders, for example. And so there are a lot of questions that come up day to day from my borrower side clients. Like they will call me up and say, hey, we're planning on doing this transaction. We're planning on making an additional acquisition, or maybe they're planning on sort of borrowing some more money as a separate facility, or maybe they're looking at paying a distribution, and then they call us and say, hey, can we do it under the loan agreement? So there is a day-to-day, there's a lot of advising and I tell my associates as well, like, don't be scared when the client will just pick up the phone and call you even as the first year associate, right? Because, you might be the one sending out all the executed agreements saying, hey, congratulations, we're closed. So you're the first sort of a point of contact. So clients might be picking up the phone and calling you with asking questions, right? So early client contact, being able to sort of kind of be in that advisory role, I think it is very rewarding to me in that sense. And you're able to build sort of a long lasting relationship with your client because, you're doing this sort of over the period of years while the facility is outstanding. I will stop there.
I want to jump in. I want to jump
Yes.
in before Jin. Everything Jin said is right, and that is really the day to day. I will say what probably a lot of people are thinking. I knew none of this or how any of this worked before I started doing this. So if you're sitting on the other side of the screen and you don't have a finance background, and you don't have a background in loans, neither did I. I never took a finance course in college. I took some related corporate courses in law school. And when I first got to doing this job, I couldn't tell you the difference between what Jin just said and an M&A transaction, for example. I think all of our firms don't expect you to come in on day one knowing how to negotiate these loan agreements. I think it's a general approach throughout our industry. I know for my firm, for example, we have an emphasis on training and expectations of how we build you up and your skills and your talent up. But the loan agreement is the main part of what we do here. It's this, if you or I as an individual want to take out a loan, it's 20, 30 pages. These documents, because of lawyers and bankers and other people creating unnecessary, probably complexity to these documents, they're now 250 pages, and they go crazy in different points, all getting to what Jin was talking about: protections for lenders, ability for borrowers, making the deals palatable for a 5, 6, 7 year period going forward. But that gets to a place of, once you kind of learn the basics of these deals and you master the deliverables and you know the process, that's what you start as on a first year associate basis. You build your skills, you see the universe of documents, which Jin's 100% right. I got excited about this because you can get really good at finance really early on. It's not to downplay what we do. There's a loan agreement, there's a collateral agreement, there's deliverables. They take 90 different forms, and based on the deal, you have cross-border issues, you have domestic issues, you have lots of different things, but there's a set universe and they all look different, but they all have a general feel to them. So with all that being said, you start really knowing little. Our firms are meant to prop you up and teach you and train you and learn. And hopefully sooner rather than later, you go from learning the basics and the process and the deliverables to the one that, is not only, sending out those emails like Jin's talking about as a first year, but picking up confidently when the client calls and you can explain to them they can do something, they can't do something, they've done something good, they've done something bad. But it's a big puzzle. I think Ariel was the one that said that. I think of it as a puzzle. It's an interesting puzzle of what you can and can't do. It's contract law on steroids, which is really what it is. It's just the Wild West of what you've negotiated. And it's kind of an interesting because money makes the world go around, and these documents are evidence of that.
Yeah.
So Jason, before we pivot too much here, because part of our topic tonight, even though I know it's not your exact practice, is capital markets and kind of how that plays into the sea of buzzwords. But could you give us kind of a 30-second, 45 max primer on capital markets to the extent that is possible?
Yeah, Ariel hit on it too. The difference between what we're talking about are loans, which are not securities, and securities, which, as you'll see and learn in law school, are rule regulation based, covered by the SEC. There's been a kind of a recent court ruling that what we do loans traditionally is not a security, which luckily we would have, three of us probably would have had to change a lot of things if something went differently. But for right now, loans are different than securities. Securities are bonds, notes, equity issuances, and those are governed more by SEC rules. For the three of our firms have different practices between the capital markets and finance, what we're talking about. I personally touch on some of the capital markets work because a lot of the covenants in our loan deals have a similar concept and strategy in some of these securities that get issued. So I get pulled into that to make sure that kind of those covenants and what the company has to live with going forward under their bonds match up with their loans, and they have the ability to do what they need to do under all their debt instruments. But a lot of our firms, most firms people are going to be looking at here, have a separate capital markets and a finance/credit/leverage finance practice.
And I'll add something as well. Like, I think finance is such a broad term. It can cover so many different things. So, Proskauer is my second firm. I've been at Proskauer about 10 years. I was at a different firm for 4 years before then. They grouped all of corporate finance as anything that can fund an organization, right? So how they raise money. They can borrow money. That's what we're kind of saying finance, but like capital markets, they can get money by issuing bonds, and then the bondholders gives the company money, right? So that was part of finance. Like equity, like they can issue stock in an IPO, right? So you can issue stock, and that was also part of corporate finance as well. So, when you're looking at law firms and how they group, how different practice groups are organized, do pay attention and ask the questions as to, hey, what is finance? And as Willkie, as Jason said, similar to Willkie, Proskauer also has a finance group that's focused on lending, and also a separate capital markets group who's focused on securities, both debt and equity.
Right.
And as you can tell, the worlds are constantly shifting in certain ways, and what had been, I was literally just explaining to a client this morning, asking why the transactions they did last year were structured as note offerings as securities, but the ones that they're doing this year are as credit agreements, as loan documents. The participants in the space keep on getting broader and broader in terms of scope, and the types of transactions get more creative and keep on borrowing different elements from different areas. And so the strict distinction between debt securities and loan agreements is not as clear as it had been maybe even just 5 years ago. So it's another thing I think that makes finance so interesting is that there's money makes the world go around, and so it keeps on maturing and evolving in certain ways that really keep even experienced practitioners on their toes. One thing, just to build off of both actually what Jason and Jin said, that there's no way of first-year law students or even 3Ls or first-year associates or what have you knowing anything that we're talking about. But I will make a plug, and I think that, because time's short, I think we were going to discuss this later, but I'll put in the unsolicited advice now. Two things I found personally to be very helpful, and if you as a law student find this stuff very interesting, that may point you towards a career in finance, or at least transactional, is that assuming your law school gives you access to reading the Wall Street Journal every day, or at least glancing at it every day, is very helpful in terms of keeping things, keeping abreast of what's going on, and really starting to understand how the greater world works with respect to financial news and finance in general. And then also, I'm a huge fan of a columnist for Bloomberg, whose name is Matt Levine, and he has a near daily column called Money Stuff that Jason is shaking his head. Maybe he reads as well. Jen, I don't know. I know a lot of our clients read it. he writes with an editorial voice that sounds like at least our generation. So I don't know if it's going to reach the younger generation, but I personally really enjoy it. And he does an excellent job, in my view, of simplifying very, very complex things that are happening in the market and doing it in a very conversational and again, I find humorous and enjoyable way. So, and that's a free newsletter. So again, Money Stuff by Matt Levine and looking at the Wall Street Journal. And if you're interested, if you start doing that as a law student and you find yourself interested in that, that could easily point you towards a career in the transactional practices.
I think we'll stay on that topic. It was one we were going to get to a little bit later, but let's stay there. Jen, Jason, anything to add in terms of suggestions to one else, kind of whether it be courses later on or resources, public resources, newsletters?
Sure, I can start, and maybe I'll start in a slightly different way. I think what I hear often is sort of summer associates who are here, they don't even consider finance as a possible area because they think, oh my God, I have to be good at math, and also I need a finance background. Neither of those are true. As Jason said, I don't have a finance background. I'm not that good at math. Like we still do our jobs, right? As long as you can read and write, and hopefully you can multiply. I think that's the extent of it, right? Addition and multiplication, yes. So don't be sort of initially put off by or overwhelmed by the word finance. Give it a try. I think you'll find that it is very intuitive, as I said, and you can learn it quickly. And also, I think one advice I would give is don't stress too much about which practice group. I don't think, like, obviously, finance is a great area, but if you're a good finance lawyer, I'm sure you'll be a good M&A lawyer, and I'm sure you'll be a good funds lawyer. Like, at the end of the day, I think it's all like driven by contracts. And I think we do at the core do very similar things across the corporate transactional area. So, do explore different practice groups. Don't prematurely set your heart on one practice group versus other, or don't exclude it without having tried it. And I always give this advice. I thought taking bankruptcy in law school was very helpful in my practice, because even though I didn't want to be a bankruptcy lawyer, sort of knowing that very unique regime of our bankruptcy laws it informs sort of a lot of things that we do on the front end before anybody files for bankruptcy. So I think that I always recommend, even if you have no interest in bankruptcy, if you're interested in corporate law, to take that in law school and have somebody teach you, because otherwise it's when you're on the job, you're busy learning your practice area, and it's hard to sort of kind of expand and learn other practice areas as well.
Yeah,
Jason, anything else to add?
I'll give a bad answer for this. I think you take what you like in law school. Sure, securities regulation could help. Sure, commercial transactions. I even took tax, thinking that could help. I think it's so different from what you learn. Take as many practical classes of clinics or small sessions you can, but ultimately you find kind of what interests you when you get to a firm. If you have a choice for a rotation, or you figure out during your summer associate time, or you just get to meet people, shadow people kind of when you get to a place. But I don't know, enjoy law school, take what you want, and if finance is it because you like contracts like a lot of us do, it sounds like you'll find your way into it.
Good, great. So we'll move on to kind of help inform one else a little bit more about how different practice areas and teams work together within your firms. And Ariel, we'll start with you. What do you work, where does the M&A teams or, other colleagues within different teams, when do they come into your transactions? What does that crossover look like? Give us more color on that.
Sure, it's a really great question. And, to be honest, there's a lot of times where finance is, to a certain extent, supporting a larger transaction. Like Jin had mentioned, the acquisition financing, there's an acquisition that a private equity sponsor, private equity company wants to do of a company, and it knows it wants to acquire the company, and it also knows that it wants to borrow money in order to do so, right? I'll give, and Jen, I think, had already spoken about that. I'll speak about a little bit of a different example, which is in the field of fund finance. And so what happens there is that you have a fund formation group that works with private equity sponsors, a private equity company, to form a new fund that is going to take outside money in order to invest it and make money for the investors and make money for themselves. That's a very, very elementary way of describing how a trillion-dollar industry works. And so as part of that strategy, the fund is going to want to borrow money both, in order to make investments as well as to pay expenses and do other things, and basically turn the dollar that it gets from an investor into $1.50 of investable money, let's say, or to turn $10 of investments into an additional $5 that they can make more investments with. So to turn $10 of investments into $15 of investments. And so we're really there at the beginning of fund formation, try to make sure that the contracts say what they need to say in order to give the fund the ability to borrow money in order to do its pursue its investment strategy. And then similarly along the lines, when it's making investments, the finance group will be involved to make sure that, again, the financing works to make those investments, to make the financing work for those investments. So I know we're probably out of time, we're very close to out of time, so I'll leave it there. But the answer is, early and often do we start coordinating with other groups in the firm.
Great, thanks. So as we start to wrap up, we've got one more question that we'll go around the group with. But if you have not registered for our raffle, do click on the link here in the chat. We're going to be giving away some really fun prizes from our firms, sponsored by our firms. Everybody loves some good firm swag, and we've got that tonight. But so here at Summer Associate Hub, we have a thing when we ask our panelists about why someone should choose their firm in 30 seconds or less. We got to keep it short. You cannot say the people, and because we do that because everybody always says the people, and then we know the people are great, and we know there's got to be a reason that they are a huge part of the reason why you stay. So tell us kind of what else is it that someone should think about your firm as they embark on the 2L recruiting process this summer. And so I think, Jason, we'll start with you. Give us your 30-second pitch on why somebody should join Willkie.
Well, I think like Proskauer, like Fried Frank, I think we do really high quality work with high quality people. I think Willkie in general kind of fits in that box of it's a large firm with 1,000+ lawyers, but it feels manageable every single time I go in. I go to other offices and I know people. It feels like a small firm that is actually really big. We've been growing a ton over the last bunch of years. And as an associate, I was able to say this. As a partner, I'm able to say this. This job gets hard sometimes, a lot of long hours. It gets very transactional, no pun intended, with the practice that we have. But I think this firm's really good about actually seeing the talent that we have, propping up the talent we have, and making sure that that's recognized. And it's not just deal after deal. You actually feel like an individual that's kind of really adding to the team, and you're working with a lot of good people. I can't not say that. Come on.
I know we need it's too hard. It's too hard. Jin, how about you?
Sure. If I can't say the people, I think what keeps my job interesting is the variety of clients that we have at Proskauer, right? Like, we're not just representing big banks, we're not just representing big corporations. I think we do plenty of that work as well. But I think having, we represent, I think obviously sort of the best known practice group in our firm is sports. So we represent the sports leagues or teams and things like that, but that's only a small part of our practice. I think we were a full service firm. We're a huge firm that does all sorts of sophisticated transactions, like Jason mentioned as well, and similar to Willkie and Free Frank. But it's the representing the big private equity sponsors here, but a smaller family office there, companies, venture funds that are just starting out to, fully established, private equity fund that with, billions and billions of under management. I think sort of the different sophistication level, sort of the different sizes, the different industries that they play in even though we're doing the same lending transaction, having that variety of clients is what keeps my job interesting day to day.
Great, thank you. And lastly, Ariel from Free Frank, bring us home. Tell us why.
It feels like Willkie and Proskauer, which are really great firms, took all the taglines that I would use as well. But the reality is that Free Frank calls itself like a small, large firm where we're large enough to work on the most sophisticated matters for really top clients on a daily basis, and we're the first call for very complex transactions. But we're only 2 offices in the U.S. and 3 main offices worldwide, and you really get a chance to know people and work across different practice groups and really build relationships. And that really results in, first of all, being able to enjoy the people that you're working with, first and foremost, but also really leads to a very collaborative atmosphere that is also results in being able to produce the best product possible for the client and the best outcome, because you're working with the same people and the same teams over and over again, and you're able to develop these very strong bonds that reinforce the ability to do this top-notch work on a day-to-day basis.
Great. Well, great. Well, thank you. So we'll move quickly into our raffles, then we can get you all over to our breakout rooms. And I know the raffles are why you came. So we'll start with the prize from Willkie, and these were all very generously donated from our firms, sponsored from our firms. And so the Willkie prize is a tote bag full of Willkie swag items. And so our winner, let me just pull my little wheel of names here for that one, is Colin Lloyd from the University of Minnesota. If you were here, I know we don't have an active chat, but you could just raise your hand on the little emoji thing. We'll know you're here. Oh, there, Colin's here. Great. We'll follow up with you and get your information over to Willkie's team. And then next is Proskauer. Proskauer is doing a Proskauer mug, a travel mug with a Starbucks gift card. And so let's see, our Proskauer winner is Victoria Torres from Cardosa. Victoria, if you are here, give us a little wait. Oh, Victoria, good, awesome. You guys stuck through it. Which is great. And then last but not least is Free Frank, also doing a tote bag with some Free Frank swag items and a Starbucks gift card. And so our last winner tonight is Eliza Wilkes, I think is how we say that, from William and Mary. Eliza, if you're, we are 3 for 3. We do not always go 3 for 3, so that is great. So good. Well, we will start to wrap it up. Thank you all for this great discussion. I truly cannot believe it's already 8:17. I feel like we just started. It's a good sign. But as I mentioned, we posted links in the chat to sign up for the firm's 1L mailing list. So do that if you have not already. And then join us over in some of the Zoom breakout rooms to chat with our panelists and members of their recruiting team a little bit further, get to know them better, and make some additional connections. And don't forget, you can move between breakout rooms. So you don't have to just stay in one if you want to chat in multiple places. And to our 3 panelists, thank you so much. It was great to meet you, great to chat. And we look forward to seeing you at another Summer Associate Hub event in the future.
Thanks, Katie. Thanks, everyone.
Thank you so
Thank
much.
you.